Recording in progress.
All right, what's up, everybody? Thanks for joining us. This is a quick little walk through. We're not going to run. We're going to walk through tools and rules. All right, we're on TradingView. So TradingView gives us several tools, but we're only going to really use, I'm going to say 3. Okay. Number 1 is our trend line. All right, our trend line. So what it is, it's the second tool right here in the off to the side where all the tools are. So go jump on your TradingView real fast and click on trend line. And what we're going to do is we're going to pretty much find where the most recent high of this particular market, this symbol Nas100 is. And I see one right here. Here's a middle part, and here's where we are now currently. This is the low. So when I click on this top right here and I zoom out, it's going to give me a trend line. And I need to find an area that price came up and touched somewhere in the middle. So what I'll do is I'll click there, and I'm going to go ahead and I'm going to extend this right. If you want to do that here, you can click that little gearbox and then style, extend right. So that's what I'm pretty much looking at right there when I come to the market this morning. Let's go back in time. Let's go to, here's 4 a.m. This is what it looked like. All right, so there's one tool. The other tool is found right below it, and it is called a fib replacement. Now, you don't necessarily need to understand what fib replacement means. You just need to know that it can create a auto and what I call a wick fill or a zone, basically a rectangle. All right, we're working with basic shapes. And what do I want to do with this? Well, I want to come down here because this is a 4-hour time frame. This is what we do every morning. We look at the 4-hour time frame. We find a trend. What's the trend saying? The trend is important. You want to trade with the trend. So the trend is saying outward motion, right? Although if we zoom out, we can see that we've been going up, but most currently it's going down. So we would be looking mainly for what? Sales, because price is going down. All right, here's our rectangle. Between the hours of 4 a.m. and 8 a.m., you have this green candle that has wicks to the top and to the bottom. What I want to do is create a rectangle on the wick. That's why I call this tool fill, because it's filling in that wick with a zone. Because we're on 4-hour, I like to use yellow. I call them the gold bars. All right, so we don't necessarily have to mark up the top and the bottom. We just want to mark up this bottom. If price does come up and challenge this trend line or break this trend line, then I would potentially look to see where it's going to go. Where is it going to go? If it goes up, I need to look on the 4-hour time frame for a place where price came down and reversed. That's called the area of interest, point of interest, or key level. So I would say something like this, where price came down and then turned around right here. That means this is important, all right? Or significant, or a key level. These are just terms that we use. All right, so if price, again, let's just quickly review. Price comes down, I'm looking for a sell. Price comes up, I'm looking for a buy. If I was to put it in simpler terms. All right, this is all mechanical. Do this every morning. Look for the 4-hour wick zone that we're most interested in. And we look for a trend line. All right, so now if I go to 30-minute, we're looking at this green candle is 7:30 a.m. I'm gonna forward this. This is all in retrospect, but while this is printing in real time, you're seeing that there is also on the 30-minute, which is something that we look for. On the 30-minute, there is this kind of wick sitting right here that we could mark up with what? A wick fill, right? And because it's on 30-minute, I like to use red. So we got 4-hour using yellow, 30-minute using red, but doing pretty much the same thing. Marking up wick fill. fills, all right, in areas of significance. We don't have to mark up every little wick because then that would get real crowded. But parts of the chart or parts of where price gave us some pretty significant turnaround. So right here at 6:30, we see that price comes up, right? Price comes up and then turns around. This area is significant. All right, so you got to get really good at identifying those key levels. That's where everybody's, subjective. All right, so then I'm going to go down to a 5-minute time frame. Now, all these candles take 5 minutes to print. And while it's printing, we're just hanging out. All right, so let's see what price is going to do. But before we do that, here's what I sent out to our group this morning. If y'all are interested in checking out that group, let me know. We're going to send you some info. If it comes up here, I'm going to take a sell. I'm take a buy, sorry. If it comes up, I'll take a buy there. Now, if price decides that it wants to show me that it wants to reject this area, then I could potentially take a sell going down here, and then I'll see how price reacts to the bottom of this level. Why do I say that? Because it came down and touched once, twice, 3 times, and then went up. Now, if it does come down again, I can look for potential same reaction, price bounces up. Or if it breaks through that bottom, I'll look to see if it wants to retest and continue down. So this is what we do every day. What we're looking for key levels, 4-hour gold bars or wick fills, 30-minute wick fills that of area of interest or areas that are significant turnaround reversal areas, points. And then we wait. So here's 8:25. The New York Stock Exchange market opens at 8:30. So I'm gonna click one more candle, and you see that it opened bullish. All right. So one other thing that I will deploy is an indicator that we have as part of our tools. That's called the Gann flip or the Gann high low. Now, because this flipped up, it's a part of our rules, but not all of our rules line up. Why not? Because I need a break of structure, which it has yet to do. Now, it left a wick. It left a wick up here. So it broke, but did not close in this area. It retraced. So, and it did not leave this gold bar with this candle. It left that gold bar way back here at 6:15. And 6:55 gave us that blue line flip. So this would be one of those entries. If you were to decide to take it, it would be something that you get in and out real quick. And that is called scalping. When you get in so fast, it's like you don't even have time. It's like seconds, man. That's called scalping, getting in and quickly getting out. Okay. So let's say you got into this trade. Oh, and by the way, our stop loss would typically be 50 points. Incidentally, it is something called a bank zone range. I'll explain that in another video. All right, so we see price make its way up, which is a good sign for the buyers. It breaks above this 30-minute red wick fill, which is our rule. Now we're going to watch and see how it reacts to this trend line. And remember, we said if it breaks above, that's a good sign for it to continue up, but we'll just have to wait and react because it could give us rejection and then head down. So we just have to watch and wait and react. So what we would typically do is risk 1 for 1. So we'll go for 1-to-1 ratio, right? So here it gives us a pretty decent bearish candle followed by another. That's telling me this trade is done. That trade is done, which is the trade that we actually took today, that we took I'm not sure if we took, no, this was a loss. This was the buy loss that we took today. But because of the 2 bars that gave us so much bearish volume going down, we were anticipating this rejection. We see it start to make its bullish move or bearish move down with a lot of bearish volume. We jump into this, sell here. And that's how quickly you have to be able to react. You can't be married to this first decision and say, well, I'm going to hold it and see if it decides to come back up. You can't make the market do what you intended to do. You got to be able to say, okay, I'm going to follow the flow. Write that down. Follow the flow. If the flow of the market is going in a certain direction, but your decision was the opposite direction, your decision is not smarter than this market. It will eat your lunch. All right, so now we're in this sell. I'm going to target 1-to-1, 50 points for 50 points. And this was this morning's sell entry. So we take the sell. It gives us one more very bearish candle. But now we're in this gold bar here. So what are we thinking? We're thinking as we are in this sell, when is it going to find its stopping point? When is it going to come down and stop and then potentially turn around, right? So now I'm looking for it to do something like this, come to at least the bottom of this 4-hour gold bar and then turn around, because that's what's happened in the past. So here's what we always say. I don't know. And all I know is I don't know, but I'll react. So our reaction time has to be on point. All right, I see that it touched the middle of the gold bar, the next candle, and then this next candle breaks through. All right, so this is a good sign for me to bring my stop loss into profit, right? And if the price does turn around and take me out, it'll take me out with my stop in profit. So this is a risk-free trade. Well, how low are we planning on taking this? There's a couple of different tools that we can use. All right, day trading booster is one. So I could potentially target a 1 to 2.6. In this case, I'll target a 1 to 2. All right, so that tool is day trading booster. You can find those in indicators. Just type day trading booster in the indicators. All right, so now I'm gonna keep this video rolling, and then let's see, when is price going to turn around? If I remember correctly, we pretty much took most of our profit at this level here, 1 to 1.5, which is part of our trade management rules. All right, taking partials, leaving a runner, putting our stops in profit. And if I do remember correctly, this is where price started to give us signs of a reversal. What's a sign of a reversal? Signs of a reversal means that price is giving us 1, 2, and when you see that W, it's time to reverse. Not always, but we want to just pay close attention. Keep our eyes out. You dig? All right. So now keep watching price print. I think at this point we're pretty certain that price wants to go up. So what we do is we wait for that red line to turn blue, which it does there. But we're also monitoring this on a higher time frame. We don't just look at one time frame. We have to keep in mind that there are multiple time frames that we have to watch. So if I were to come to this 30-minute time frame, I would see that there is another 30-minute wick zone, wick fill that printed right here. And so now it seems as though we've exited. We have a break of structure right here, indicated by this arrow, and then our Gann flip. All three of our rules coincide. We have confluence. We use 50 to gain 50. And I think if I do remember, this is our last trade of the day, and it wants to consolidate. Consolidate means it goes sideways. This is the worst kind of trade to get stuck into, because now you don't know if it's going to go up. You don't know if it's going to go down. You're in the waiting period. But either way, we're risking minimum. 1% per trade of the account. And we're watching patient. Patient wins in trading. So we see that it's building up. Each one of those candles taking 5 minutes to print. You're just like, get really good at doing something else. Don't just watch these candles. Finally, we see a break of structure up. That gives us some confluence that price does want to go up. And so we're anticipating the same thing that happened here will potentially happen here. So at this point, we don't know. We're just going to get ready to react. The next candle hits our target 1-to-1. So we could either take profit or we could take partials, bring our stops into profit and leave a runner. And now I believe we targeted a 1-to-1.5 again, which would be right there somewhere. And we watch price print. It comes outside of this trend line, which gives us some indication that price does in fact want to go to the higher price ranges, but we wait and see how it reacts to that trend line again. All right. So here it hits our target and it takes us out with our stop loss in profit, that one candle. So it hit our 1-to-1.5, and then we watch price print again. I didn't take this, but some of our folks that were watching the charts, I believe a lot of them took this sale here. Hopefully their stop was 50. And I believe, if I'm not mistaken, they took this sale and watched price come down yet one more time into that 4-hour wick fill. And this is where we are currently. All right. So all of those trades based on rules, based on the markups that we started with in the morning, 4-hour wick fill, 30-minute wick fill, looking for the break of structure down, looking for the Gann flip, exiting those wick fills. That's pretty much what we do. Use your tools, follow them rules. All right. Thanks for watching, guys. See you in the next video.